Sullivan. I'm a former IRS agent. I do these videos. Some are repeated, but I do them because I get calls. I've worked thousands of IRS cases. I'm an expert in IRS resolution. I've been doing this, 53 years. Matter of fact, I wrote some of this is in a best-selling book about IRS settlements. So many people call me and they're scared to death of filing their back tax returns. So let's say you do file your back tax returns, you make a decision to file. What's going to happen when you file those back tax returns? This is something that you need to know. So I used to be this part of what's next. I was what's next. First of all, I'd pick up tax returns. I would process them at the service center. And then the service center would then create an assessment. So when you process your back tax returns, the service center creates an assessment that says you owe money. So what happens at that point? IRS will generate a series of notices to you. CP14, CP501, CP503, they're all 6 weeks apart. CP504 comes certified special. Then you get an LT11. IRS reaches out. What do you want to do? At some point in time, IRS is going to give you a financial statement. At that time, it's game on. Why is it game on? Because IRS wants to know, what do you want to do now? What are you going to do about the tax debt? That's the question that you have to ask yourself. But if you go to the right people, we can tell you what's going to happen to you, because before you submit the tax returns, a good practitioner like me is going to give you the IRS financial statement. So we go over it and we determine what that result's going to be. I'm going to know well before you file your tax returns what the result's going to be, because IRS uses the same financial statement, same standard, same protocol to go ahead and close your case off the computer after you get the assessment. How's that case going to close? It's either going to close by currently non-collectible, a payment agreement, or an offer in compromise. Those are the only three ways that you're going to go ahead and deal with that IRS debt. They must give you a financial statement. Look it up, a 433F. That's the statement. They'll either put you once again in a currently non-collectible. If that happens, they stay there a couple years. They come back out. A payment agreement, because your financial statement dictates that, or you can settle your debt, hopefully through the offer and compromise program, which I must know something about. Anyway, when you go ahead and file your back tax returns and you've been afraid to file, you're going to know what happens before the bill comes out. Why? Because I can tell you. Give me a subscription. Thank you so much. I appreciate it.